Hey everyone, welcome to my trading sessions. Before we jump in, let me explain the format. I trade key levels and typically see 2 to 3 trade opportunities per session. I usually identify potential setups 3 to 4 minutes before I decide to take them, and the actual trades last anywhere from 2 to 10 minutes. Unlike a lot of other trading content, I'm not focused on showing off profits. I'm focused on teaching the process. You'll see the real decision making, why I take certain trades, why I pass on others, and most importantly, how patience is the key to successful trading. Each video will cover one specific topic, things like reading market sentiment, preparing for economic reports, managing risk. I've cut out the waiting periods and condensed each session best I could to just the educational moments. But if you want to see the full unedited sessions, just reach out. I'm sharing all of this completely free because I want to help people learn how to trade properly. This isn't a course I'm selling, it's not a funnel to some paid service, it's just real education from actual trading sessions. One last thing, I'm doing this to help people learn, not as a full-time business. I got kids and life happening, so the content may not always be perfectly consistent, but it'll always be real and it'll always be focused on helping you become a better trader. Remember, good trading is about waiting for the right opportunities, not forcing trades to happen. Now, let's see what the market's going to give us today.
Good morning, Wednesday, 27th. This is my recap. Obviously, it's my trading session that I was in. I'm trading currently at the mall, which is not ideal. What happened was I had a doctor's appointment, and it was the first place I can find that I can plug in somewhere and sit down comfortably. Being a trading nomad is not a good idea. You make mistakes. You have limited screens. Even though I do most of my work on these screens, I also usually have other charts up. But anyway, so the entry I've set here is on the 45 EMA on the 32nd, but that's actually probably not the best entry. The best entry would have been at the 45 EMA on this 1 minute, right? And the reason why is the pre-market low is right there, right? So I can expect price to come up into it, and hopefully it would tap it and then come back down. Now the pre-market low is basically, this is the range that's set prior to the New York Open, right? So basically it's the high that's set when the market opens at 6 p.m. Eastern, and the low that's set before the New York session opens at 9:30 a.m. in the morning. So since, right, there's some confluence here, the pre-market, the 45, so I can expect price to come up here. So that actually would have been a better entry. And another reason why that would be a good entry is because, well, personally, I'm not paying attention to ES, right? And that's a bad sign. I should be looking across the board, but as you know, when you're trading and you're setting up your laptop like 30 seconds before, right, you want to trade, you're not doing yourself justice or not doing yourself a favor because you're not taking the time to actually plan your trade. So I don't know. I don't remember whether this would have come down. A good target would have been the bottom of that OR. I don't know if we're actually going to hit it or not. I think we are. Maybe we're not. But if you take the measurement, right, from the 45 EMA, which is at 39, right, to the OR, that's 30 points, right? Again, done for the day, and we would be leaving. But no, we haven't actually hit it yet, so I don't know if we're going to. It looks like we're going to, but instead, I have an entry that's too low. So I'm struggling, and where I would have been in the green right now, I'm not, right? I would have been in the green, basically a couple $100, $250, $300. But instead, I'm in the middle of a trade because I took a trade too early, right? Patience is everything. The other thing is the ES does not have any bearish signals. I didn't consult it. I didn't spend enough time looking at it, and again, that's a mistake. And the reason I review all my trades afterwards is basically so I can learn from what I made as a mistake, right? What I did wrong and what I did right. So let's see here. There's a bunch of stuff in this video today. So what I did was I tried to cut out as much of the waiting period as I can, but this was in the middle of a trade. I just kind of wanted to show you what was going on. Now, ultimately, I know this trade was not successful. Okay, and that's okay, right? Because it's not about the trade being successful, it's about being a good trade, right? So the next question is, was it a good trade? Well, actually, no, it wasn't a good trade because my entry was wrong. If my entry was right, it was a good trade. If my entry is right and it actually hit the OR, it's a great trade, right? But if the entry was wrong and it almost went to the OR and then didn't hit it, it's still a good trade, even if I lost. But now I'm in a bad situation, right? So I'm trying to eke out my profit, hoping, because the psych level is a really good target, right? Hoping price is going to come down, which it probably is not, right? Well, I know it didn't, but I had to extend my stop up the maximum 40 points, right? Which is where it is now. And right, so basically I set myself up in a bad spot. Now, if I was super smart, I might consider taking off this trade right now because I have this green volume block on the ES that exists. But over here, I know why I'm staying in. Over here, I'm looking at it and I have the red advancing over the green. So I'm hoping that this red is going to overtake the green and then it's going to come back down. So basically what that is sellers, right, getting a position, and hopefully it's going to overtake it and then just shoot down. But it doesn't mean it will. And the ES is kind of saying, hey, I'm not interested in doing that. And, I'm looking at the ES right now. And if the ES breaks the Asian low right above, I would probably exit this trade because I got the ES. I have two successive green volume, right? Which contradicts completely the 30-second chart, right? They're not in agreement. Because they're not in agreement, I should actually bail on the trade, which I think I do. Hopefully I don't go too much into it before I bail. But if I had a 45 EMA, right now, where would I be? I would still be in the green. I wouldn't be red, I'd be green, and I wouldn't be worrying about this at all. Wish I could speed this up. Okay, so I am not I'm hanging because I have the red delta that's like right in the middle of the green, so that can go either way at this moment, right? The red can go away and the green can just shoot up, or vice versa. Now the problem is the ES is saying, hey, the red is going away. And ES is saying something completely different. So if I was going to look at it, the ES is definitely saying long. The 30 seconds saying could be either or. The 1 minute NQ right on the left side is like, maybe. But now we have a blue dot. Okay, so I should be bailing on this trade literally right now. But I think I'm hoping which is not a good strategy, right? Hope is not a strategy. I should be looking at objectively, and objectively, this is not a good trade anymore. I also have like the signals on the 30-second. It looks like a bear, the beginning of a bear flag, right? The fact that it's coming down. So I'm looking at it now, and I should be saying, shit, that thing is going to pop, right? It's going to pop right through 2040, 540, and that's going to be over. Okay, it just broke the Asian low, broke the OR. Hopefully I'm going to exit this trade soon. Maybe I'm going to break the 930 open. I should be closing the trade. Please close the trade. Okay, and look. The red. So this has to, I should be, the trade needs to be closed right now. The red is gone, right? But I'm hoping, and this is not good. Hope is not a strategy. And the best part, there's time to get out, and it's still at a profit or at a break even. But even though everything's looking bearish, it's not. Because the green right there is saying there's a lot of volume building up. I think it's going to explode, and it's just going to shoot right up. Which is why you have to pay attention to everything, right? It's not just one thing. Some people trade off of one chart. That's a mistake, right? You got to look. Everything's telling a story. There's 3 pieces of information. There's 3 charts. There's probably 15 pieces of information. But all of these things are telling a story. We have plenty of time to bail on this trade because I got a ton of green buildup here. It's not going to, when they explode, it explodes, right? This is consolidation. Price is consolidating here, and then it's just going to punch up. But not doing anything about it. So this sucks. I cannot believe I didn't exit this trade. But the reason we go through these exercises, this review, right? Again, I could have bailed on the trade here, break even. The reason we go through this review is so we learn from our mistakes. Okay, let's see. Okay, we're breaking the Asian low again. This is not good. I put a blue line in the sand. The blue line is, hey, I'm going to okay. Now green volume zone appeared. So what that means is there's lots of people waiting to buy right there at the VWAP. So it doesn't take a rocket science to figure out what's going on. ES progressive on both, right? Volume zones, trend support. Again, doesn't take a rocket science to figure out what's going on. I got agreed. They're all in agreement right now that we're long. But one of the problems with trading is that you want to be right. Unfortunately, I think I'm falling into that trap right now. Hopefully I'm going to, yeah, there you go. Okay, so cool, I start in the hole, $452. Now, if I had taken the trade at the 45 EMA, we wouldn't have been successful, but it would have been a good trade. Okay, so where we are right now is, but there were plenty of, going back to that, there were plenty of opportunities for me to leave, and I didn't leave, and that was a mistake. Okay, so this is another trade. This is much later. I cut out a whole bunch of stuff waiting around in between. So I put in this order. I've been trailing it up, right? And I'm basically trailing it up. There's a lot of green. There's a lot of things that are going on positive. There's this little orange volume block, which is the London high and the previous high, right? What that means is the high of the day, the other day, and London high is here, right? So these are areas I'm looking for price to come back into. What I'm doing right now is I have an order now. The order probably, okay, so the reason it's on the green dots, 45 EMA, instead of the other one, boom, there it goes, is because I was more confident because we're in such an uptrend that we're going to come down and wick into that. The 45 EMA would have been fine, as you can see now. Okay, we do have a volume zone above, but I'm not worried about that. And why? Because it's only 600, it's only 600, right? It's not enough. But that is a nice target. So look at that, 90 to 610, right? So, and another volume film. So probably what I would do is I would move my target right there to the psych level. Okay. All right, so I'm going to manually put in a stop and target. So that would be a good, but the fact that I have two successive volume zones probably means I should move it down just a hair and the most probable target. I would love for it to come up. I just don't know if it's going to. I got blue or green advancing on blue in my delta on the lower right. I have my target is set at 609, which if you look, right, that's the bottom of that volume zone. I have the ES with some conflicting information, but really it's just ranging, right? So it's not as relevant. But because it's ranging, I should have a smaller target to work with. Okay, 90 to 27. Okay, so that's 17 points. So it's not a lot. It's safe. It's not a lot. 1900 on the volume. So what that means is I can expect price will probably wick through, but then come back down. Because it is a block of volume, but I can expect price to come up and grab whatever stops exist above the psych level. Okay, and if you look over on the right hand side, right, I have that super trend, right? That's the little red dots coming down. The super trend is where I have, that's the most probable target on a 30-second. I have green down at the bottom, advancing on the red, right? It's coming up and it's starting to overtake the red, right? So I would hope that it would overtake it. I'd get a sharp move up and then we'd be done and out of here. Okay, I moved down the target just a little bit. And I moved it down to just be right at the top of those where I'm hoping it's going to wick to. And the reason I'm doing that is probably because I'm getting a little nervous on the trade. I was unhappy with the previous. Okay, and there I just moved my stop up. I usually do not trail a stop so close or go to break even so fast. I'm just doing that right now, which so obviously that means I'm a little concerned on the trade. And it could also be that I'm kicking myself from the bad entry this morning. So the entry this morning, probably I should have broken even or made a couple dollars on it. I wasn't going to hit full target, but there were lots of signals that told me to get out. There was, the entry was more than obvious, but I was more aggressive because I wanted to be in a trade. And again, psychologically, the fact that I'm not actually working at my desk makes me do different things. It's really important you do the same thing over and over and over again. You do not change your behavior, right? You don't change the way you look at risk. You don't change any of those things because consistency is the key to being successful. Okay, so I have that wicking that's happening at the 45 EMA, and that's good. I have the green, as you can see, ready to overtake the red. Now, I am sure I'm feeling a lot more bullish at this point. Yeah, so because that happened, if I had a chance, I would have moved my target up here. But I didn't. So now I'm down 187 on the day, right? So, okay. So the last trade is actually the one to talk about, right? And, okay, so this is farther on. This is like probably, well, what time is it? Yeah, it's 11:20, right? So I'm only trading for a few more minutes, but we're at 11:20. And what I'm looking at right now, and is that price has been ranging in here in this area between this top volume zone and this bottom one. Now, which one is more important? Well, the top volume zones, those are minor. But I do have stuff happening at ES. Like, this is not a place to play, right? You're not going to make money in this area. You need price to break out and come up. But what I really know is, and I wrote the little, if you look over to the lower right-hand side of the screen, you can see that volume, right? I put that little yellow line there. Volume is decreasing. What is that? It's consolidation. It is winding up for a freaking explosion. Now, the question is, which way is this explosion going to be? Well, I can tell you which way it's going to be. I mean, to me, it's obvious, right? What I would expect is price to come down into the VWAP and then rip back up, right? Looking for a giant wick. This is a huge amount of consolidation, right? There's a lot of stuff going on here. These zones above are nothing, right? So I would expect price to just rip up, but I expect price to come down first, right? It's a trap. So what it's looking to do is capture all the people below that have stops. They're like, hey, I'm going long right now, right? So they put in their long, they put in their stop, and this is going to take them all out and then basically rape them and then pop all the way back up and make a shitload of money. And this is what institutional investors, that's basically what they're doing right now, right? So all these things are suckering people into the trade right now. So you have all these dudes who are like, hey, I'm going to put my entry at what they're at 90, right? So this is what I'm doing. So this is the area. So I'm just drawing it out right now. And I'm drawing it out because I'm sending this to a friend of mine because I think it's going to be such a good trade. So I'm expecting price to come down to that VWAP down there at 71. And then I'm expecting price to rip up here. Okay, I'm spending a lot of time right now doing this. So sorry about that. Okay. Okay, so I'm expecting price to rip down there, snag that entry, and then rip right back up, right? And what's going to happen is I'm expecting price to come to touch the that volume zone that exists here, right? The 2300. It's going to first it has to break through that. First it has to break through the 90, right? It has to get below 90. Then it's going to come to here, and then when it hits this resistance, I'm expecting it to wick down, tap it, and then come back up. And because I am okay, and obviously I'm spending a lot of time doing, what am I doing? Oh, I'm drawing an arrow. Okay, so I'm drawing an arrow, a couple arrows to anyway, I'm sending a picture. I'm going to screenshot this and send this to a picture to my friend. What's going to happen? So I feel smart, I guess. Okay. So I'm sure I just texted him exactly what was going to happen. And basically, I'm looking for price to break 90 to come into this zone. It's going to hit a little resistance. It's going to wick down, take out that VWAP, and then pop right back up. So I got on the left side or right side, I have my advancing right price. I want price to come up, back down, and then up, back down to the little blue line or green area, wick, pop, and then shoot back up like a rocket. Okay, so I cut out a lot of stuff in between because it was very painful to watch. Now, my entry VWAP has been slowly moving up, but I have not adjusted my entry, and that's a mistake, right? My entry should be between that the VWAP and that little super trend that's there, right? And so what I'm waiting for is price to come up into that supply zone, or sorry, the yellow volume zone up above, and then just to rip down into there, right? So let's see what happens. Got green delta. Look at the green delta. It's now on track, right? It's the reason I blew the blue line there is right so I can make sure. I'm trying to see where it oscillates, right? And it's right there. And so I expect it to come up. I expect red to be forming. Expect it to come up to right there, right? We have a ton of resistance. And then the institutional move should be happening, soon. Okay, so everybody's all tricked in now. See, that volume zone is all these people like, oh, hey, I'm getting in on this. This is going. I'm going to enter right there. So you have a whole bunch of dummies thinking they're going to enter right there. But really they're entering, they're going to get in and be stopped out before they ever got in the trade. And because it's going to shoot down another 30 points. Boom, there it goes. There it goes. Okay, so it just broke the 90, right? It's going to have that. It's going to wick through, and it's going to do it. Now, you're probably saying, hey, Ken, isn't that awesome? But it's not. It's not, because if you look, I missed the trade by a frickin' tick. I missed the wick by a tick, right? I did not have the entry in the right place because I was not paying attention to it, because I wasn't moving it up. It should have been between those two areas. It literally came and it touched it and did not fill. And that's the trade. The trade that never happened. The trade that I sent my friends a thing half an hour in advance of exactly what was going to happen, and then it didn't. And it didn't because I wasn't paying attention, right? I wasn't being good. Attaching an entry to a trail or to an indicator is a really good thing, because as time moves, right, the indicators move to accommodate the changes in price, right, and changes in calculations. You need having an entry at static level is, at least for the way I trade, is not smart, right? We're trying to catch it at the bottom or at the retrace, right? And that's it. Okay, now we have this blue dot that formed there. I mean, the trade's over. The trade's over. The one thing I am happy about is I didn't FOMO into it, which I really, 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 really wanted to. It absolutely killed me. But the reality is I could get into it and then it shoots down. I lose everything too. But anyway, that's it. I will see you guys tomorrow.